Ladies and gentlemen of the crypto space, it is Tuesday, September 29th. Another day. We do what we do, but we're doing hopefully not the same thing every day. We try to do new things, new choices, better choices on a daily basis. Because if we're doing the same thing every day, are we getting anywhere? If we're waking up and going to work and doing the same thing day in, day out. Are we actually getting anywhere? And that's the question we all need to ask ourselves on a daily basis. I sure as hell ask myself that every goddamn day. Because tomorrow, I'd like to have different choices, different options. Do I want to get up and do work necessarily, or at least the work that I don't want to do? I want to do the work I want to do, or at least I want to have the choice to do exactly what I want to do. I have many things that I want to do. Do I get to do the things I want to do? Absolutely not. Who's in the house? We got Angelo. Always a pleasure. RR. My man, Barry DGB. Always a plan, baby. Derek, what's up? Did you buy the Just Nibble? Yes. Ricken. Best part of my day. Best part of my day. That's right, where I get to actually talk. Talk what's on my mind about what's going on in this system, in this country, and this planet. Which scale is most important? I don't necessarily know. I tend to think the macro scale, the planetary scale, is the most important. But then, we have to drill down and we look at our country, and then we look at our neighborhood, and then we look at our own personal family and our own personal finances. But here's the kicker. Here's what I know and what I've learned. It's all related. Even at the global scale, the better we understand it individually, the better choices we can make to affect ourselves individually, but we have to understand ourselves in the context of the big picture. Today's general topic is crypto slowdown and be offensively defensive. What does that even mean? What the hell is this schmuck Noah talking about? How can you be defensive yet offensive? All right, ladies and gentlemen, let's pop it over to the main screen. Oh, today's episode, and every damn episode going forward, is sponsored by Change Angel. Non-custodial swap exchange, put your assets in, get some assets out, no deposits, no withdrawals, because that's the way things are supposed to be done. Do not hold your money on exchanges unless you want to participate in the KuCoin asset evaporation program. That's one of the largest hacks in a long time. Stop keeping your money on exchanges. And frankly, I feel the same about a lot of traditional finance, like equities and E-Trade and Fidelity, and like we trust them implicitly, and it's really awkward, how much trust we have in the legacy financial system. Why? Why do we have such trust? J-Dog, Digibyte, woo, loving my Digi. Unfortunately, the Digibyte chart, let's pop it up on the main screen, might as well show some chart action, is basically horizontal. There is absolutely nothing interesting whatsoever with the Digibyte chart. I think I fell asleep. I'm sleeping. I'm in fact sleeping right now. There's maybe a bit of a ascending triangle, but unfortunately this is boring. And frankly, this is the whole point of today's stream, whole topic, crypto slowdown. Everything is boring, at least what I'm seeing. If you pull up CoinGecko and you go over the last 24 hours, I mean we're sleeping. This is sleeping in crypto land. The central land with a 10% rip? No, that's not a rip. That's not a rip. That's not a knife. Yeah, a couple weeks ago, I called it like to the day. What was it, 2-3 Thursdays ago, and there was just it's like a light switch got turned off, and that was the awesome switch. The crypto awesome switch got turned off. It was 20% rips, 30% rips, 40% rips on the daily for everything. 10, 15, 20, 30 assets were ripping double-digit percents daily predictably. Now we have to go out to the 7-day to get those 30% rips. This, on the 7-day, looks like the way the 24-hour used to look about 3 weeks ago. And it was a completely different set of assets. albeit synthetics is still there. Thor, I think there, as mainnet is released, that's going to be interesting to keep an eye on. Celsius has a very strong incentivized supply disruption mechanic, which is why it has just been increasing significantly. I mean, there's some narratives to all of these, but as everyone knows, my most I am most interested in stuff like Cosmos, which has ripped a respectable 22% over the last 7 days. Yes. Anything else? Gotta love Maker. Highly restricted supply. I'm surprised this is cheap. No reason it can't be a couple of bill. Aave. Let's take a look at the Aave chart. Band. Oh, technical complexity, oracles. Arlen from BlockNet has a variety of opinions about Oracle solutions, and I agree with him. And unfortunately, the whole DeFi space has a lot of maturing to do because they've completely neglected everything but the Ethereum space. How could DeFi just be Ethereum? No. You need the interop solutions, and it's not just REN. That's not the only interop solutions. You need the atomic swaps, you need the exchanges, you need a really robust system that incorporates a variety of technologies that offer choices and alternatives. So there's a lot of maturing to do in this space to be a well-rounded, redundant, backup, alternative options and choices system. You can't just have a single system. It doesn't work. It's not stable. Anyway, let's take a look at Aave because it's up 13.5% for the week, and it's one of my favorite assets, particularly with regard to the Lend Aave token conversion coming up really soon. So what's most fascinating about this, look at the daily. Look at the daily. Look how far it came from all-time high to the daily 200 EMA. Let's take a look at Ren real quick. And the daily, here, it actually broke through briefly the 200 EMA on the daily. So Ren got ripped to the downside really hard, but broke out of its falling wedge, came back up, and is retesting. Right now it's retesting the 200 EMA on the daily. And, we'll see what happens in the next couple of days. You got to stop looking at the 30-minute chart. You got to look at these daily candles. And daily breakout weekly? What does that even mean? You got to wait for an entire week for a candle. I mean, look, this entire DeFi experience that everyone has had is this. And look at this. Look at these. This is called a doji or something like that. But the point being, this shows incredible volatility. Maximum volatility. You have no idea whether it's going to go up or down. And there's just huge price movement on the weekly. A stable asset class, you're going to see very little movement on the weekly chart. 1%, 2%, 3%, and that's a relatively safe risk-off type of investment. So we're not dealing with risk-off investments when we're talking about anything in the crypto space, including Bitcoin and Ethereum. Green. Let me fix my green screen. Oop. Hello. Nathan's in the house. Always a pleasure. Stelios, I got a question. You talk about the EMA. Should I see mainly the daily 200 EMA or the 204? So I really love the 200, the exponential moving average. It weighs the more recent price action more than the older price action. For me, the 200 EMA is so meaningful. Now, you obviously have SMAs and you have the shorter time frame moving averages, and that's why I like the guppies. The guppies have a lot of averages. So averages come into the picture with regard to resistance and support, and more so the concept of mean regression. Things like to return to averages. So if you're going to deviate from an average, it takes a lot of volatility. It takes an event in many regards. So here, take a look at Ren, for instance. Let's pull in a little bit closer. So if you want to push through this average, it's going to take an extraordinary amount of volume to deviate from the mean, the average activity over periods of time. It's deviant behavior. That takes extra effort, extra volume in many regards, and event. So this orange line is the 200 EMA on the daily. So it's right now red is pinched between the 200 EMA on the 1 hour and on the daily. I bet you it's pinched between the 4 hour as well. Yeah. So the 4 hour is actually above the 1 hour. But you can see here. So there's nice support. There's the support of the yellow line, which is the long-term support line. That's a big drop to the downside if that actually happened. But point being, look at how the 200 EMA, which is the orange line here, compared to Lend. And here's the 200 EMA. So Lend was up massive, thousands of percent, and it did not come down a lot, relatively speaking. And that's fascinating. I find its price action to have been deviant as compared to the vast majority of other assets that I've looked at from a technical perspective. I mean, this difference between the 200 EMA and its most recent price action is significantly different as compared to many other charts. Let's take a look at the daily. No, you're not going to have a daily 200 EMA. Synthetics is too new on Binance. Yeah, let's look at the daily. All right, yeah, look. So the 200 EMA on Atom, it broke through on the daily. So and it's all over the place here. Daily on Bancor bounced right through, and now it's literally using the 200 EMA on the daily as resistance. Kyber, 200 EMA on the daily broke through resistance. Let's look at Digi. Digi, it's see that, and this is how you look at things from a big picture. 200 EMA on the daily for Digibyte showed as support. So, this is a long-term asset here, folks. This is not something that has price action because of hype, extreme volatility because of incentivized governance assets. This is an asset that has very different price action. Very different price action compared to the things that have been overly inflated. Look at the deviation from the long-term moving average. So that's what mean reversion is. It's it makes perfect sense to me. And then guess what? Check this out. If we're Charlie's in the house, my man, always a pleasure. Genuinely different. We're looking about. We're talking about Aave at the moment. Let me two more sentences about Aave. So what? And then I want to bring up my favorite equity. So I'm bullish on Aave. So don't take my words as investment advice. And I have a fair position. I've watched it go down a little bit, about $1,800 give or take. I'm down, but overall it's up 20 something percent for the week. What is that? 13% for the week, which is nice. So I'm up. 18 down 18 for the day. I don't know. But the point being, I don't have many bets on the table. The remaining assets that I have on the table are stuff that I cannot, or I don't, I have a very big reason, or I'm forcefully not capable of liquidating a position. Ren, I'm not capable of liquidating a position. One, I'm up like 500% on it. Um, and two, they're locked in dark nodes, which means if I unlocked, I would have to wait 1 month before liquidating, which means who knows what the price action is going to be in a month. And that's doesn't make any sense. Doesn't make any sense for me to liquidate that. Same thing with Curve. I can't do anything. I have a bunch of Curve locked up. I would love to talk about Curve. Only so much time on the Noah Talks stream. Talk about all the stuff I want to talk about. So I got stuff locked up in Curve for 4 years. I couldn't touch it if I wanted to. But this thing is producing $9,267 per year. We'll see what that does, and that's relative to daily volume. If the daily volume goes to $1 billion a day, which is not entirely unreasonable if there's a massive adoption of DeFi protocols, being that Curve is the Forex of the crypto space, dealing with identically valued assets and stablecoins. This is Forex in so many metaphorical regards. Absolutely incredible. And I'm very hopeful that my proposal, so I have a proposal out for the Curve DAO, to further incentivize the locking of CRV for VECRV. When you lock CRV, you get VECRV tokens. And but if what I'd like to do is encourage the locking of tokens. So as you encourage the locking of tokens, you're disrupting supply. So if we encourage more locking of tokens than the inflation associated with the vesting process, then we could potentially have a supply disruption. That is deflationary and price appreciative, uh, and has a price appreciative effect. We'll see what happens. So the point is, I like Curve. I think they need to tweak the damn Dow. Hope they tweak it sooner than later, to encourage further supply disruption, because this chart just falls. It fell through support, and right now it has fallen through broken to the downside for its most recent sim triangle trend formation. Anyway, so we were talking about Lend and how it didn't hit the 200 EMA, as compared to a bunch of other assets that I've shown that really hit the 200 EMA on the daily. So this is something that is frankly my only bet on the table, really. How do you like them apples? All right, let's see how that bad boy plays out. So that's what I'm holding. So mean reversion, reverting to the mean. Take a look at Tesla. Man, this is going to be brutal, guys. I mean, look at this mean reversion likelihood. Come on, how are things so deviated from the mean and nobody's freaking out? People are putting money into this thing. I mean, look at the sim triangle formation. So bear in mind, look, this is also a bearish sim triangle formation, in my opinion. The first leg being down. So if the first leg is up and then down, the opposite of this price action. Um, I think that this sim triangle, the point being, has bearish overtones, in my opinion. At least that's the feeling I get, especially considering market sentiment, global macro, the way many folks talk. Raul, Stephen Van Meter, Brent, Lynn Alden. A lot of the way these folks talk, I just have bearish sentiment. And it's not perma bear. It comes down really to the markets and politics. And look, the Dow's sliding. There's weakness going into whatever this election is. The best tweet I saw about the debate tonight is, what happens if both the candidates fall asleep? I mean, come on, guys. Listen, I'm not being picky on older persons. I myself will eventually be an older person, and I'm not the youngest chicken in the coop. I'm 37, but come on, guys. These are some old guys. Like, aren't they 70s and 80s? And they're representing the vast majority of our hopes and dreams and opinions. How could they possibly be representing me? No, man. They're definitely not representing what I want, what I'm interested in. Neither of them. I would love, whatever. The whole point is, look at this Dow governance. I mean, why can't I vote on the shit that my taxes get spent on using an automated? It is guaranteed that this was my vote. It is mathematically provable that this was my vote. And there is no way that anyone else on the planet could have voted using my key unless they stole my key. And so then you could imagine, and this is what Jared talks about, Jared Tate, about how crypto needs to change the authentication and identity process, and how pathetic it really is, the status quo. 9-digit social security number represents my official United States identity. It's pathetic. It really is. There we go. Yeah. uh, no, in general, do you see Polkadot as transform? Yes, I see Polkadot as transformative as Cosmos. Polkadot's a good deal, but bear in mind what comes into the picture with regard to Polkadot is time horizon. That is not going to be now, and that's probably not going to be like next year. You're talking like 2020, 2022, maybe even later. And to top it all off, it's speculative because it's not going to disrupt Ethereum. As Ethereum is going to move forward by that time, and the whole system is going to move forward. And first out of the gate disruptions are hardly ever disrupted, which is really interesting with regard to Curve and Uniswap. Uniswap is a permissionless ERC20 launchpad. It's basically IPO. There's no rules or regulations at all, which is awesome, and that's the way things are supposed to be. We need change. We need something different because the way the system worked is no longer working for everyone. It's only working for a small percentage of the population, and that's not fair. So Uniswap is bringing back freedom of choice and options to many people. And the same thing with regard to Curve. It's a first out of the gate disruption that fits alongside of Uniswap because it's dealing with a very unique set of crypto assets. So obviously it's not the majority, but what I find it interesting is I'm calling it a duopoly. It's definitely a duopoly, which doesn't happen often, like Microsoft and Apple and Google. It's a duopoly of mobile phone tech, where Android obviously has the global dominance, substantially larger user base as compared to Apple products. Apple products obviously are dominant in countries where phone prices are subsidized, probably China and America. But the vast majority of the planet doesn't use an Apple device. They're mostly Android users. And that's exactly what's happening here. The vast majority are using the ERC20 Launchpad for trading and speculating of new asset types and stuff. And then all of the, like, you can imagine 1inch is routing through Curve all over the place. Probably almost every transaction is routed through Curve in some way, shape, or form, because that is the liquidity of base pairs. So, but I would think of stablecoins as used as a base pair the vast majority of the time. People are providing FDAI, FUSDC, F whatever is on Curve nowadays, FUSDT, and and these are the base pairs, and these are serious collateral assets. Man, this REMBTC, WBTC, SBTC, HBT, this is going to be a very interesting how this plays out over the next couple of years. I mean, this is a serious ongoing disruption going on Curve and Uniswap, and what's the third one? Third is what's DDEX? Huh. But no, is that Balancer? Maybe the third one is Balancer. But you can see they're obviously very dominant. Now I still have my hopes for Bancor, but we'll see. Obviously, the price action is under immense pressure, and we'll see what kind of development they come out with, what kind of DAO they come out with, what kind of incentivized incentives they come up with regard to the IGO, their governance asset. I don't know. We'll see. Hey, look, that's exactly what you just asked me, Pellets. How does Bancor fit in that AMM narrative? Highly speculative, because what I know is, but this is what I talk about all the time, guys. Shy away from speculation, and you have to remember what is actually happening. That is what's most important. What is actually happening? And what is actually happening is Uniswap and Curve they are dominant. And it is very few times in history that dominance is overtaken. And it takes a long time. And the best example I've given many a times is Apple overtaking Microsoft that took 20,000 years. Microsoft dominated Apple for the vast majority of their existence. And it's only more so recently, the last 10 years, that Apple has dominated. Anyway, so Bancor, I'm very hopeful because I think their V2 protocol is creative and ingenuitive. They were the first AMM. They are deserving of more attention than they get. And but if you are going to invest in it, that is highly speculative as compared to many other places to store value, or at least to hope value will appreciate. Minimize your speculation, ladies and gentlemen, in times of volatility. We got this ridiculous election with two people that may fall asleep on stage. We have, here, check this out. Where's the 40%? Where's that article? Something like a 40% uptick in bankruptcies in New York City. And the kicker was, with the CNBC article, is most small businesses don't declare bankruptcy. They don't give a shit about bankruptcy. Most small businesses, owners of small businesses which have struggled more during the pandemic, are less likely to file for bankruptcy. Instead, many are simply leaving the keys in the door. You think a small business that is their hopes and dreams are crushed, and I'd be miserable. I wouldn't file bankruptcy. I wouldn't even tell the landlord to go fuck off. I'd leave the keys in the door and I just leave it. And that's just exactly what happened in 2008. If you saw like The Big Short, literally the mail was still being delivered to the house. The mortgage uh, um, bills were still being delivered to the house, and nobody was there to receive it. And in fact, that was a great scene in The Big Short. In one of the scenes in The Big Short, they were inside of a house that was abandoned, and on one of the mortgage bills, the landlord, the homeowner who just left the house, wrote, "I'm sorry," and it was circled, and the house was abandoned. They literally just abandoned the property. And that's exactly what's happening. And you can imagine there's a lot of mortgages on properties, and there's a lot of leases that are signed that they're just being abandoned. And everyone talks about the stock market like it's doing incredible things. And frankly, I still think a tragedy is yet to come. And this is all because they printed $6-7 trillion, and that's the only reason it's stable. If this ever loads, I'll show you guys the S&P, SPX. I mean, we had mean reversion on the 4 hour, but I mean, look at the weekly. I mean, come on, guys. This is just a tragedy. You know, I don't care what people's opinions are about the virus, whether people are like, we shouldn't wear masks or we should wear masks. Frankly, if I got the flu, I'm going to put a mask on, and then someone will yell at me, why are you wearing a mask? Because I don't want to get your ass sick because I got the flu. I'm being courteous to you. So people can think whatever they want. And frankly, I just think it's just common courtesy. If I got mucus and shit coming out of my nose, you want to see it? My daughter's blowing snot bubbles in the living room. You guys want me to? Do you really want me to not wear a mask? If that's becoming somewhat of a norm, with my daughter blowing snot bubbles in the living room, it's kind of common courtesy, guys. You guys will also listen. It's my right to not wash my hands when I get out of the bathroom. Listen, I'm just saying. I don't want to wash my hands. Oh my God, Charlie, the Bronx is a hot mess. There's got to be some. I can only imagine the urban areas. I grew up in Queens. I grew up in Bayside. Um, grew up a good part in Flushing. Spent a lot of my time in Flushing. Can only imagine the small business in Flushing. Anyway, but look at this. So mean reversion. So the pandemic obviously blew us down past the 200 EMA and the weekly. Where was the boom in the economy? What is this? What is this price action, guys? This is just scary, man. I like I like when an asset is representative of actually what's going on, because then there's a correlation. Then I could say this price is more likely to go up because what's going on is incredible. Like some sort of new technological innovation that's going to change the world, or maybe Tesla's made an extra $1 billion. They doubled their revenue. Oh, then their stock price is going to go up. But they're not doubling their revenue right now. And the story for Tesla is going to take years to grow. And I'm more bullish than anyone on this stock. I'm so damn bullish on Tesla, but I expect it to implode if there's anything true about what the stock market should be. If it's not about righteous, right and wrong. It's about if there's anything honorable about the stock market, this should correct. So the stock is representative of the company. And then you can invest in the stock because you see what the company's doing. And they're like, all right, I like Tesla. I like what they're doing. They're growing as a business. They're making more revenue. I want to grow with them. This isn't growing with them. This isn't growing with them. I don't know what this is, but it's just disturbing. Anyway, My man Charlie. My mother grew up in the Bronx. Small world. I grew up, obviously. I spent a lot of time all over the Northeast over the years. Um, all right, so I think that'll wrap us up. I don't need a rant and rave. Tonight's going to be an interesting one with all this political craziness going on. Frankly, I just tune out and I find it boring. The day the day I could say to the IRS, give me a tax receipt and tell me what you spent my money on, I'm going to give you whatever. I think I paid the IRS like 50 grand last year. Hey, IRS, I just gave you 50 grand. What did you spend my money on? If I sent them that, if I sent them a letter or an email or whatever, they wouldn't respond to me. And in a day and age of crypto and programming and applications and web applications and software, I find that insulting that I can't ask someone, something, an agency that I gave so much money, they can't tell me what they spent my money on. And if I have an issue with what they spent my money on, I can choose not to give them that money next year. I want to give them the money for something else. And that's where this whole real coolness of governance comes in. And that's very hopeful. I'm hopeful that we could vote. I could select what my tax money is spent on. And that seems honorable and respectable and evolutionary, maybe even revolutionary. Because whatever it is, it makes the system right now seem pretty pathetic. No one will be able to tell me what they spend my money on, so why the fuck am I giving them money? Absolutely ridiculous. Like the names of the patterns, Adam. Um, all right, ladies and gentlemen. No, Adam, well, know where would be a good place to learn how to read crypto charts? Investopedia. Google it. I mean, you have ascending triangles, descending triangles, symmetrical triangles. You got the more complex shapes and forms, but I look for support and resistance. I like guppies. I like moving averages. Mean reversion. To me, these are very. I don't go too far into the technicals, but these are just very philosophical concepts that make sense to me, which is why I've discovered them over the years, and this just makes sense. And this is not where we are. We are not mean reverted. We had a systemic event, and we had then had an explosion of activity. It's like we came into the great expansion of incredible, like the world is doing incredible things. Look at this chart. Oh my God. Yeah, 40% increase in bankruptcies in New York City, and it was like 30% of the the rental apartments are vacant. So, yeah, this chart does not reflect what's going on with our economy. And there is great reason to be defensive. It's 12:02. There's great reason to be defensive. How do we be offensively defensive, ladies and gentlemen? Listen, risk off. My recommendation is to be risk off. We got lucky. We got lucky, ladies and gentlemen, with the big rips in the crypto space over the last 3-4 months. I'm very hopeful, folks, we're able to bank some profits. And what do you bank it in? Denominated in Bitcoin. Because the narrative for Bitcoin, you have to follow. Listen to Real Vision. Listen to Raoul Pal. Listen. Oh my! You just gotta hear. You gotta hear one video, and it might require you, if you have it in you, to get a subscription. But you gotta hear. I mean, all of them are credible. These crypto videos, and frankly, the non-crypto videos. I want to see the older ones here. Older. No, not that. Where's You gotta hear what's his name from Fidelity? Jessup. Tom Jessup. You got to hear Tom Jessup speak about Fidelity. The people with the trillions of dollars out there, the companies and the organizations and then the family offices that manage families that have collectively probably more than trillions of dollars. They're not talking about crypto assets. They're not talking about altcoins. They're talking about Bitcoin. And Bitcoin needs to grow substantially in order to really be able to absorb hundreds of billions of dollars, because right now it's only a couple $100 billion asset. So this is going to take time, but the asset that is going to be that is risk off in the crypto space is Bitcoin. And it's part of a very global macro narrative that a lot of the smartest minds in the world are talking about. And this real vision really will blow your mind if you start watching some of this and you hear Raul talk about the way Bitcoin fits into the big picture. Because I know the vast majority of you coming at this shit from, you've only seen these altcoins, you've only seen Ethereum, and you've maybe never invested in the stock market, but you're seeing all of this shit for the first time, and you don't have a big picture of where all this stuff fits into the big picture. This is only a small part of a giant story that dates back hundreds of years and thousands of years when you put in gold into the picture. But this is dating back hundreds of years, and then Jared Tate will talk about how many times the dollar has been reinvented, like 3 or 4 times over the last 100 years, and we are on the verge of another reinvention of what fiat means, and Raul loves to talk about the fourth turning, and we're on the precipice. No, that's a negative connotation, but we're on the verge of very meaningful systemic change politically and definitely technologically with what the BSN's doing out in China. They really want to change the way business is done. Incredible, absolutely incredible. All right, ladies and gentlemen, 12:05 on a Tuesday afternoon, September 29th. Be safe, be risk off. Take very calculated risks if you're going to place bets. Do not bet the house. Do not gamble. Look for confluence, multiple indicators that a price action is likely to go up. And you want to minimize your risk. You work too hard for your gains, and you need to protect them. Thank you, everyone, for joining me. We'll have another episode tomorrow, and that's the way we do things around here. Y'all have a wonderful afternoon. Peace.